As a trader, I used to think that having more tools, more charts, more tabs, and more notes would automatically make me better at trading. My desk was a chaotic mix of notebooks filled with scribbles, multiple monitors flashing different time frames, economic news feeds constantly updating, and dozens of open browser tabs for chat groups, forums, and research. Every trade I took felt like I was juggling too much at once, reacting to price movements I hadn't planned for, and second-guessing myself constantly. That was the moment I realized the environment I created was directly sabotaging my performance, and the same principle applied to the way I approached my trading mentally. My brain was overloaded, constantly scanning for signals, tracking indicators, and trying to predict market behavior in a sea of distractions. Minimalism, in the context of trading, isn't about owning less for the sake of owning less. It's about cutting out everything that doesn't provide value in decision-making and focusing exclusively on what impacts performance. In my case, this meant reassessing every element on my desk, every indicator on my charts, and every step of my trading routine. I asked myself, does this note, this tool, or this open tab actually help me make better decisions, or does it just distract me? The realization was uncomfortable but necessary. Most of the charts I watched were redundant, many of the indicators overlapped, and I spent hours reviewing data that I never even acted on. This wasn't productivity, it was busy work disguised as preparation. Physiologically, clutter and cognitive overload have a measurable effect on the brain. Studies in neuroscience show that when the brain is bombarded with excessive stimuli, the prefrontal cortex, which is responsible for decision-making and impulse control, becomes fatigued. This fatigue makes it harder to stick to a trading plan, easier to chase setups, and increases emotional reactions to minor price swings. Essentially, the more external noise and internal clutter I allowed, the less capable I became of staying disciplined. I could feel it in my body during trades: tense shoulders, shallow breathing, and racing thoughts. My emotional state directly correlated with my physical environment, and my environment was telling me to react instead of act. Cognitively, overcomplicated setups lead to analysis paralysis and impulsive trading simultaneously. While I was trying to be thorough, the clutter actually made me more reactive. For example, if I saw a signal in one indicator but another indicator gave a conflicting message, instead of waiting or reviewing my plan, I often entered a trade impulsively just to do something. This behavior is common among traders who feel overwhelmed by information. The paradox is that having too many tools to make rational decisions often reduces the quality of those decisions because the mind is stretched too thin. To address this, I began a rigorous process of decluttering both physically and mentally. Physically, I removed unnecessary monitors, closed redundant charts, minimized open tabs, and kept only the essential tools for my strategy. Mentally, I streamlined my trading journal to track only key performance metrics, such as win rate, risk-reward ratio, and adherence to my plan. Every pre-market and post-market routine was scrutinized to remove steps that didn't add tangible value. This wasn't about laziness. It was about creating an environment where focus became effortless, where every action had a purpose, and where I could calmly evaluate the market without distraction. The results were immediate and measurable. Trades became more deliberate, entries were based on predefined setups rather than impulsive reactions, and emotional control improved because I was no longer overstimulated by clutter. I could stick to my stop losses more consistently and avoid unnecessary risk. Over time, this minimalist approach became more than just a preference. It became a strategic edge. By simplifying, I wasn't doing less, I was doing better. Students learning from this case need to understand that minimalism in trading is not superficial. It's a tool to reduce cognitive load, improve decision-making, and maintain emotional balance. Each trader will have unique distractions, but the process of evaluating every element of your environment and your routine for value is universal. Begin by identifying physical clutter on your desk, digital clutter in your tools and charts, and mental clutter in your thought patterns about trading. Ask yourself whether each element actively contributes to executing your trading plan with discipline. If not, remove it. Another critical point is how minimalism interacts with pre-trade preparation. I learned that having fewer but more reliable indicators allowed me to conduct faster and more accurate market assessments. Pre-trade checklists became simpler and easier to follow, which reinforced discipline. I also noticed a significant decrease in impulsive trades because my mind had fewer distractions pulling it toward emotional reactions. Even when the market moved quickly, I was able to act calmly because my mental space was uncluttered. Finally, minimalism also extends to time management. I realized that overloading my schedule with extraneous research, constant news updates, and social media interactions created a false sense of productivity, but in reality left me mentally exhausted. By eliminating unnecessary tasks, I freed up mental energy to focus on the trades that mattered. This principle is vital for any student of trading because it highlights that trading is not about working harder, it's about creating the conditions to work smarter. I also realized that minimalism extends to time management. Overloading my schedule with extraneous research, constant news updates, and social media interactions created a false sense of productivity, but left me mentally exhausted. By eliminating unnecessary tasks, I freed up mental energy to focus on the trades that actually mattered. With a cleaner workspace and a more deliberate routine, I could respond to market movements calmly, without being pulled in multiple directions. Each decision felt more intentional, every entry and exit clearer, and my ability to recognize opportunities improved simply because my mind was no longer cluttered. After reviewing my own trading performance, it became clear that much of my inefficiency stemmed from sources of clutter that went beyond simple distractions. Identifying these sources was the next critical step. Students need to understand that clutter is not just physical. It can be digital or even mental, and each type has a measurable impact on trading performance. In my case, these layers of clutter were directly linked to impulsive decisions, missed setups, and overtrading episodes. Let's start with physical clutter. My trading desk used to be an accumulation of monitors, devices, papers, and miscellaneous items that I rarely used. Multiple screens were intended to help me track more markets, but in reality, they fragmented my attention. I would find myself jumping between charts and devices, reacting to minor price movements rather than following my strategy. Even small items like coffee cups, notebooks, or loose cables contributed to a sense of chaos that my brain processed as low-level stress. This is something many traders overlook. The environment affects cognition far more than most realize. A clean, organized workspace doesn't just feel good, it reduces cognitive load, enabling the brain to focus entirely on decision-making rather than on processing irrelevant stimuli. Digital clutter proved even more insidious. My trading software was overloaded with charts, apps, indicators, alerts, and notifications. I had dozens of tabs open, dozens of alerts set, and multiple news feeds running simultaneously. The constant bombardment of information created an illusion of control, but in reality it caused analysis paralysis. I would spend precious seconds deciding which chart to prioritize or whether a signal was reliable, and those seconds often made the difference between executing a trade properly or acting impulsively. In some sessions, I found myself reacting to alerts that weren't relevant to my strategy, simply because the brain had become conditioned to respond. Teaching students to audit their digital environment is essential. Every chart, indicator, and notification should serve a clear strategic purpose. Anything that doesn't add measurable value should be removed or disabled. Then comes mental clutter, which is arguably the hardest to recognize. My mind was constantly running through setups, strategies, and potential trades, even when there was no actionable opportunity. Fear of missing out, overthinking entries, and juggling multiple strategies at once created a persistent mental load that reduced clarity and delayed reaction time. In the past, I would see a setup that aligned perfectly with my rules, but I would hesitate because my brain was still processing 5 other possibilities simultaneously. This hesitation often led to missed trades or entries that were poorly timed. Mental clutter also amplifies emotional responses. Small losses feel larger, minor mistakes trigger frustration, and overconfidence emerges after a streak. Students must understand that mental clutter is not laziness or lack of skill, it's a cognitive bottleneck that can be systematically reduced. One of the most effective tools I used to identify these bottlenecks was a trading journal. I didn't just log trades, I tracked environmental conditions, digital settings, mental state, and physical context. For example, I would note how many charts I had open, how many devices I was monitoring, and whether notifications were on. I also recorded mental observations, like whether I felt scattered, anxious, or hyper-focused. Over weeks, patterns emerged. Sessions with multiple unnecessary charts correlated strongly with impulsive trades. Days when mental fatigue coincided with physical clutter saw higher loss rates. This exercise made it undeniable that clutter, physical, digital, and mental, was not a side effect of trading. It was a direct contributor to underperformance. Let's break this down into actionable categories. For physical clutter, students should start by auditing their workspace. Remove all items that do not serve your trading process. Limit the number of monitors to only what is needed to effectively implement your strategy. Organize cables, remove distractions like food, unrelated books, or objects that draw attention away from the screens. The goal is not minimalism for its own sake, but clarity. A clean, focused environment allows faster recognition of patterns, quicker execution, and less cognitive noise. For digital clutter, the first step is auditing charts, apps, and alerts. Ask yourself, does this chart contribute actionable insight, or is it simply occupying attention? Are alerts aligned with my strategy or just adding reactive behavior? I eliminated all extraneous tabs, consolidated essential charts, and disabled notifications unrelated to my trading plan. This created a digital environment where every stimulus was meaningful and actionable, not random noise competing for attention. Students should develop a one-purpose, one-chart rule for clarity and apply it consistently. Mental clutter requires self-awareness and routine. I train myself to approach the market with one strategy at a time and to write down potential setups rather than juggling them all mentally. Meditation and short breaks during sessions helped reset attention, while reviewing past sessions in the journal reinforced awareness of cognitive overload patterns. Teaching students to recognize mental clutter is about developing a metacognitive perspective, observing thought processes without being fully controlled by them. This detachment is what allows decisions to be based on strategy rather than emotion. Tracking all 3 types of clutter through a trading journal revealed cumulative effects. Physical and digital clutter increased mental noise, which then led to impulsive trades, chasing setups, and missed risk limits. Students need to see that clutter is not just a minor inconvenience, it has a measurable, compounding effect on decision-making. By documenting when trades went poorly, the environmental conditions present, and the mental state at the time, patterns become visible and interventions can be designed to reduce clutter across all dimensions. Finally, it's important to integrate this clutter identification into daily trading routines. Begin every session with a workspace audit. Remove unnecessary items, check that charts and alerts are purposeful, and do a brief mental check to assess focus and energy. After trades, journal any instances where clutter influenced decisions. Over time, these exercises build discipline and awareness, turning what was once invisible chaos into structured, manageable conditions that support consistent execution. By systematically identifying sources of physical, digital, and mental clutter, and using a trading journal to track their impact, traders develop both situational awareness and proactive control. This awareness is foundational to the next step, creating preventative systems that actively reduce exposure to these distractions and improve decision quality in every session. After identifying the sources of clutter, the next step is to implement systems that prevent these distractions from impacting trading decisions. Students need to understand that awareness alone is not enough. Structured routines and tools are essential to maintain focus and discipline. In my experience, the difference between a productive session and an impulsive one often came down to whether preventative systems were in place. Scheduling trades around peak mental performance is critical. In my own case, I noticed that my alertness and decision-making were highest during the morning hours, shortly after arriving at my desk with a clear mind and a fresh cup of coffee. Late afternoon and evening sessions, particularly after work, were fraught with fatigue and mental clutter. Students should begin by observing their own energy cycles, noting when attention, patience, and reaction speed are at their best. Once identified, trading sessions should be concentrated during these high-performance windows, and more complex or higher-risk trades should be reserved for times of peak clarity. This approach reduces the likelihood of overtrading and impulsive decisions that are often fueled by fatigue or emotional imbalance. Pre-trade checklists are another key preventative tool. I developed a simple, consistent routine before every trade that ensured alignment with my strategy. The checklist included confirming risk parameters, verifying that the setup met all criteria, and performing a mental check for emotional bias. Students should see this as more than a procedural step. It is a cognitive reset that forces the trader to pause and evaluate rather than reacting automatically. Over time, these checklists create habits that reduce impulsive trading, reinforce discipline, and protect against decision fatigue. Risk management rules must be actively enforced. In the past, when my focus was diluted by clutter, I occasionally ignored stop-loss levels or doubled down on losing positions in an attempt to catch back to equilibrium. Instituting strict risk parameters, such as maximum loss per session or maximum position size, prevents these emotional impulses from turning minor setbacks into significant drawdowns. Teaching students to define these limits ahead of time and treating them as inviolable builds consistency and protects both capital and confidence. Techniques for managing mental and physical fatigue extend beyond scheduling and checklists. Exercise, even brief sessions, can improve cognitive performance and emotional resilience. Short meditation practices, breathing exercises, or simply standing and walking during breaks help reset focus. In my own case, stepping away from the screens for 5 minutes after intense setups reduced emotional carryover from previous trades and prevented reactive behavior. Students should recognize that trading is not just a cognitive exercise, it is also a physical and emotional discipline, and maintaining energy and mental clarity is as critical as understanding charts or patterns. Monitoring emotional state is equally important. Journaling plays a dual role. It not only tracks trade outcomes but also documents mindset, environmental conditions, and energy levels. I would log feelings of frustration, excitement, or distraction, noting how these states correlated with trading decisions. Students should adopt a similar practice, making it routine to self-assess before and after trades. Additional tools, such as alerts for excessive trades or accountability partners who review sessions, provide external feedback loops that reinforce disciplined behavior. Preventative systems are also about designing the trading environment to support optimal behavior. Limiting the number of charts open, removing unnecessary notifications, and keeping the workspace organized ensures that only relevant stimuli reach the trader's attention. In my own sessions, I would consolidate charts to one or two per strategy, mute irrelevant alerts, and ensure my desk was free of unrelated items. This physical and digital streamlining reduces the cognitive load and allows me to respond accurately and efficiently to setups that meet my criteria. Students should understand that creating an environment conducive to focus is a deliberate action, not an afterthought. Another element is the structured review of routines and trades. Regularly evaluating the effectiveness of preventative systems reinforces accountability. I would analyze whether checklists were followed, whether risk limits were respected, and how fatigue influenced trades. This continuous feedback loop identifies weaknesses in systems, allowing for adjustments before minor issues compound into larger problems. Students should adopt the mindset that system design is iterative, evolving alongside personal habits and market conditions, rather than fixed or static. Ultimately, preventative systems integrate scheduling, checklists, risk management, fatigue management, and environmental design into a cohesive routine. In my experience, when all these elements were actively applied, trading became more methodical and less reactive. The clutter that once created indecision and impulsive trades was systematically removed from both the environment and the mind. Students must see that these systems are not just procedural, they cultivate mental discipline, reduce emotional interference, and enhance strategic execution in every session. Establishing and maintaining minimalist systems requires more than just cleaning a desk or closing unnecessary tabs. It demands creating a deliberate structure that guides every action during a trading session. Early in my trading career, I frequently fell into the trap of reacting to every alert, switching between dozens of charts, and attempting multiple strategies at once. My mental bandwidth was fragmented, and this often resulted in overtrading or missing high-probability setups. Over time, I recognized that clutter, both physical and mental, was quietly sabotaging my ability to focus and execute strategy consistently. I began restructuring my workspace to remove all unnecessary items. Physical clutter, such as unused devices, papers, or decorative items, was cleared, leaving only a single monitor, a trading journal, and the tools required for analysis. The act of cleaning and simplifying the space was not merely aesthetic. It served as a cognitive signal. Each morning, when I sat down in a clear environment, my mind understood that this time was dedicated to disciplined, strategic trading. Students should understand that this same principle applies to their own spaces, whether they are trading from a home office or a shared environment. Minimalism is a mental exercise expressed physically. Digital clutter was equally critical. I had a habit of keeping dozens of charts open simultaneously, subscribing to multiple trading alerts, and maintaining numerous browser tabs with news feeds. While it felt like being on top of everything, this behavior diluted attention and created decision fatigue. I systematically pared down my digital environment, retaining only the charts and alerts directly relevant to my strategy for the session. Notifications unrelated to trading were disabled, social media and messaging platforms were silenced, and I scheduled email checks outside of trading hours. This created a virtual environment that matched the mental clarity of my physical workspace. Mental clutter proved to be the most insidious challenge. Thoughts about trades I missed, setups that didn't trigger, or strategies I hadn't tested competed with the present session, often leading to hesitation or impulsive entries. I began integrating mindfulness practices and journaling into my routine. Each trade was logged, including the rationale, emotional state, and market context. Over time, patterns emerged that revealed how stress, fatigue, or cognitive overload were influencing decisions. Students can adopt this approach not just to record trades, but to map the mental pathways that lead to errors, overtrading, or emotional reactions. Routine became the backbone of maintaining minimalism. Each day, before the session started, I performed a mental and physical checklist. Workspace organized, charts prepared, alerts configured for strategy-specific triggers, and a brief mindfulness exercise to focus attention. This pre-trade routine acted as both a signal and a shield, helping to prevent impulsive behavior. It's crucial to recognize that the preparation phase is not optional. It creates the foundation for disciplined execution. In my experience, the hours spent on setup and simplification often yielded higher returns than the trades themselves because they ensured focus and alignment with strategy. Monitoring emotional reactions was a natural extension of this minimalist approach. Even with the environment optimized, emotions still influence decisions. I tracked feelings such as impatience, anxiety, overconfidence, or frustration during trades. For instance, on days following a losing streak, I noticed that the urge to chase setups increased dramatically, even within a decluttered environment. The journal became a tool to map these reactions against specific market conditions, revealing actionable patterns. Students should understand that removing clutter does not eliminate emotional risk, but it creates the space to identify and manage it effectively. Minimalism also facilitated deliberate decision-making. With fewer distractions, each trade became a conscious choice rather than a reaction to noise. I found that the simplified environment allowed me to analyze setups more thoroughly, adhere strictly to risk management rules, and avoid impulsive deviations. The concept of intentionality became central. Every action, from entry to exit, was measured against the strategy rather than emotional impulses. Teaching this to students emphasizes that performance is not solely about technical skill, but about the ability to operate within a controlled mental and physical ecosystem. Periodic evaluation ensured that minimalism remained effective over time. Market conditions, strategies, or tools evolve, and so must the environment. I scheduled weekly reviews to remove items, tools, or alerts that no longer contributed to high-probability trades. This continuous refinement reinforced discipline and prevented gradual accumulation of clutter that could undermine performance. Students can adopt the same mindset, treating their workspace and systems as living processes rather than static setups. The long-term benefits of minimalism became increasingly evident. Stress levels decreased, emotional volatility diminished, and the quality of trade execution improved. I observed measurable changes in performance metrics, higher win-to-loss ratios, better adherence to stop losses, and reduced instances of overtrading. Perhaps more importantly, the practice of minimalism taught a fundamental lesson about control. By managing the environment and mental focus, traders can significantly influence outcomes without changing market conditions. Finally, minimalism instills discipline and focus that extend beyond trading sessions. The skills of prioritization, awareness, and mental clarity translate into better strategy testing, journal analysis, and overall cognitive resilience. Students who adopt these principles will notice that decision-making outside of trading, including evaluating setups or reviewing performance, becomes sharper and more deliberate. The combination of physical simplicity, digital streamlining, and mental clarity fosters a professional approach to trading that is sustainable over years rather than weeks.